All right. News of today is AMC being hyped up. AMC yesterday popped up and it's a short squeeze that's going on because a couple of stocks that had high short interest are moving up, and again, everything's being hyped up, and some people are running in to buy, and they're going to be left holding the bag. So I want to start with this stock right here. I just want to show something. So I own this stock. I've had it for less than 2 weeks. And when I have a stock that, if I have a 25% move in a day, I'm already looking at, I don't wait for my exit. If I have a stock that moves up 25%, I'll start selling partial position in it. Whether it's, quarter of my position or half my position. If I have a stock that moves up 25% in a day, it's a gift. And sometimes the market gives you a gift. Just accept that gift and take it. I don't get greedy and expect more. So this is a stock I own. I'm up over 100% in less than 2 weeks' time. The market's given me a gift. I'm not showing this to brag about it. I just want to show, so today I had a stop order. So yesterday, the low for the price yesterday was 413. I had a stop order at $4 today. So meaning when I put that stop order in, I put that stop order in with my broker. I don't have to watch the stock tomorrow. I don't have time to be at the computer watching the stock all day. If the stock traded at $4 at any point during today's trading session, my stock would have sold automatically. It would have sold at the market. It didn't go anywhere near 4. The low of today was 497, and that ended up going up 19%. So guess what I'm doing? I'm putting another stop order in. My stop order for today, which will go in effect tomorrow, will be for the low of 497. I'm going to put a stop order at 475. So if this stock at any point during tomorrow's trading session touches 475, my position will be sold. If it doesn't touch 475, then I'll continue riding it up. And that's what I do. When I have something like this that's giving me a gift, I'm not looking to plow more money into it. I'm looking for an exit. I'm starting to look at the chart. We had this record volume. The first day it broke out right here. It went up 22% in a day. It was news related. It didn't go hit my 25% that I'll start selling a partial, so I held on to it. But now, up 100% in less than 2 weeks' time. It's a gift, and I'm looking to exit my position. So let's jump over to AMC stock. AMC. So you can see AMC yesterday jumped up 95%. 95%. Today it's down 17.9. If you're not trading this like on a 15-minute chart, if you're a day trader and you're using the 15-minute chart, this is difficult to trade. To just like buy and hold and everybody jumping in and thinking they're going to get back at Wall Street. So look back here in January. This was when the whole GameStop short squeeze happened. If you held through this, congratulations, Bob. I don't know how many people actually held on to that. Going from a 301% spike and dropping all the way down from 11 down to 5, losing 50%. If you held through that, congratulations, but you should be looking to get out of this. From in January, it went from $2. We are at 51.34 at today's close. How much more do you expect out of this stock? And there's no fundamental reason for this stock to be moving up like that. This is all speculation. People just jumping in it. It's a short squeeze. So for those of you that don't know what a short squeeze is, so let's take this stock right here, let's just say at $5. If I want to short the stock, I can tell if I think AMC is going out of business, or if it's going down to 2, for example, let's say I can tell my broker I want to short 100 shares. What my broker will do is they will sell 100 shares of some other client's shares that they have, and the client doesn't even know. So those shares are sold. I'm credited the $500, but I owe the broker 100 shares. At some point, I got to return those 100 shares. So what happened on January 27th, when the thing spiked up 301%, I already, if I was short those shares, I would have lost 300% of my money right there. The difference is when you buy, let's say the same example at $5. If I buy 100 shares at $5, we know what my risk is. I'm risking the $5. So if I bought 100 shares, it's only $500. The stock can only go to zero. We know the maximum risk. The maximum risk will be zero. It can't go lower than zero. Once it hits zero or goes bankrupt, that's it. I lost my $500. But when you're short, you can lose. Theoretically, your risk is unlimited. So what happens once it goes from 5 to 10? You've already lost your $500. Once it goes to 10 to 15, you're losing more than the $500. So what happens is your broker will be calling you. If you don't have enough cash in your account, your broker will be calling you to ask for more money. They won't allow you to be short without depositing more money into the account. So if you don't have more money, if you don't deposit more money, the broker will actually close out your position. Because if for some reason you go bankrupt because you don't have the money to back up your short, the broker's gonna end up the one taking the loss. So that's what's happening right now. That's what happened with GameStop. So what happened is a bunch of people were short, like the hedge funds were short. In fact, in GameStop, there was more shares short than actually existed. It was 140% of the shares were short. So what happens is people are scrambling. Not only do you have people running in, buying the stock, thinking they're gonna become millionaires overnight. I'm sure some people did. I'm sure some people made a lot of money, and I'm sure a lot of people got left holding the bag. But what's happening too is you have these people who are short who have to buy the position to get out of their short position. So that's what's happening with AMC right now. So a lot of this is people rushing into buying, and I'm not buying the whole story that this is all retail traders. I think there's hedge funds involved here. There's hedge funds that are short, and there's hedge funds that see these short positions and are pushing the stock up and pumping it up, hyping it up for retail traders to jump in, and somebody's gonna be left holding the bag. It's a chair of hot potato. Who's gonna be left holding the hot potato? If you're in this and you're not trading, if you're buying this thinking, oh, just like Doge. If you're buying this thinking you're gonna make some quick money fast, which you can, but if you don't have an exit point, you're gonna be left holding the bag. If it was me, just like the previous stock I had just shown, I'm putting my stop orders, I would be using a stop order on this. I would be putting a stop at yesterday's low of 35.59. So I would be putting a stop order at 35.50. If the thing keeps running, good. Then we'll see what happens tomorrow, and you move up your stop order. Unless you're in front of you, you can watch it in front of your computer. You can watch it on the 15-minute chart. This is just a difficult stock to just buy and hold. Even as a trader, like somebody like myself who trades off the daily chart, for me to just buy this and come home on the weekend or in the afternoon and see what happened, this thing might drop back down to 20, might drop back down to 10. When the drop comes, it's going to drop fast. You've seen what happened in January. I'm actually surprised that this thing has spiked up again. And look at the record volume in January. Again, I keep speaking about this volume. Once you get this big, let me zoom out so you can see, like, The volume that volume spike in January was a pretty much an all-time record in the history of the stock. I'm actually pretty surprised that the volume we're seeing right now isn't at this record. So we could get another surge, and we could get another 50, 100% surge again. There might be something left in the tank here for this thing to keep surging, because I'm not seeing that record volume. I would suspect we're going to see another record volume day like this, but the volume's high. The volume's definitely high, but seeing that the story's repeating again, I would suspect we're going to get close to this this volume here, this record volume we've seen in January. So if it was me, I would have a stop in place. I would try to see if I was in it, sure, go for the ride, see if this thing spikes, but I would definitely be using stop orders. I would not be trading this without a stop order. And the same story that's happening with AMC, it's happening with a lot of stocks. So I have a list here we're going to go through that has high short interest. So when the broker shorts your stock, they have to report it to the SEC so you can see the amount of short interest in a stock. That's how we know GameStop was short 140% back in January, because those numbers have to be disclosed. So I'm just going to cycle through some stocks here. This list of stocks we're about to go through is a list I have of high short interest stocks. So you got here, you got Workhorse right now. Again, yesterday up 19.6. Today it was up 28.2. It closed at 28.2. It probably was up 40% today. Looking at the intraday high. Again, look at this record volume. We're matching the volume that we had over here in June. So again, I'd be looking for an exit. All this volume coming in, everybody's coming in chasing this stock. It's gonna get dangerous. I'd be using a stop order on this. Same with this one. We're not seeing record volume on this one, but again, yesterday it went up 13%. This is what I find interesting. It was up 13%. Everybody must have wanted to jump in, because look in the morning. It closed at 874. It opened at 1046. So it gapped open. So many people wanted to get into this stock that they just put orders, get me in, that the price gapped open. The price opened $2 higher than where it closed yesterday. And look, a higher volume day than yesterday, and the stock, even with all that hype, it ended up coming down. I'm going to just go through these. There's a few that spiked up, just like AMC. I mean, you're getting some moves. Look at the, here we go, Bed Bath Beyond. Went up 62% yesterday. 62% yesterday. Today, down 27%. So if you bought yesterday, anywhere above 40, not going too good for you today. Look at here in January. This was when the whole GameStop squeeze was going on. Up 20%, up 43%. It went 60% in 2 days. Record volume came in, and then the volume dropped off, and then it just pulled back. So we're getting kind of the same effect right now. Does it have more room to run up? It could. That's the market we're in right now. Is just the weird market we're in. It's just a crazy market. But I would definitely be using some stop orders. PetsMed Express, another one. Up 58% yesterday. Today it's down 28%. Same thing, January. GameStop effect. Spiked up. Look at the volume. Next day you had a lower volume day. Crashed back down. Look what happened. Look at these last 2 days. Yesterday it jumped up. 58%. It jumped up 58% yesterday. Today we have a lower volume day, and it went down 28%. So just look at this pattern that happened in January, and use that as a warning of what can happen. You might be waiting another 3 months with this thing dragging down. Let's see. Tootsie Roll, like, come on, like, look at it in January. It went up 34. Let's see, went up 15%, 10%, there's 25%, and there's another 11%, over 35% in 3 days. What the hell changed with Tootsie Roll? What fundamentally changed with Tootsie Roll? If you're telling me these charts are going up over fundamentals, anybody who's telling you, oh, AMC, they just opened up, you can go to the movies again with no mask, that they should jump up 200% over that news? Like, I don't think the business is going to change. If you think people are going to stop using Netflix and watching TV, and all of a sudden this news is what's driving this move, I think it's crazy. But if you're in it, ride it. Just use some stop orders. I'm just saying, you got to have your exit plan. This is another one. It hasn't spiked up. I actually own this one. So that blue line right that you see on the chart, that's my stop order, which is a low of 21.36. That's my stop. Just trying to see if there's any more that spiked up that we can use as an example. I mean, you look at these back in January, like this was when the whole GameStop thing happened. All these had high short interest back in January too. Like this move right here, that went from 10 to 20 in a couple of weeks. This was the whole thing that was going on with GameStop. This one, I mean, yes, it's moving up. There's some interest coming in now with the whole AMC, but I'm not seeing the volume here. If I start seeing like a crazy volume coming in, that's when I'm like, I don't know how much room is left in the tank. Here's GameStop. Look at GameStop. Look at the move it had. And never mind it, going back to August. I'm just talking about January, when it spiked 57% here and it just kept running. I'm surprised that this price is back where it is. I would suspect that GameStop would have crashed down by now. But I'm surprised that there's no volume coming into GameStop. I figured with AMC doing what it's doing, the crowd would be coming back into GameStop. I wouldn't be surprised if we don't see some action coming into GameStop next week. Once the hype dies down on AMC, I wouldn't be surprised if we see some action in GameStop. Look at this. GTT, Global Telecom and Technology. Yesterday, up 57%. Today, it's up 39%. It was probably up another 50% intraday, but it closed up 39%. This move, you had the opportunity to make 100% in 2 days. Look at the volume. Look at the volume. That's record volume. Record volume coming in. Who's left to buy? Look at all that volume that came in. Again, to me, I would have a stop. If I was still in this, I would have a stop at today's low. I would be putting a stop order at today's low. At 100% in 2 days, you should have been out of it already. You should have taken your profit. You should have taken that gift. When the market gives you a gift, take it. Don't try to squeeze more out of a lemon when it's already squoze. Here we go, BlackBerry. Yesterday, up 31%. Today, it's up only 4%. But again, this is what, look at this candlestick here. That's a very bearish right there. When the stock opens up higher, it gaps up, because everybody needs to get in this thing. I got to get in this before it's too late. Let me buy. Just put a buy order. Nobody's even putting a limit. Like you're gonna say, oh, I'll buy if a limit order is you want to buy, but only up to this price. So if like yesterday, let's scroll the chart back. So you don't see what the action of today. So let's say you were looking at this chart today and you say, well, you know what? Let me roll the dice. I'll throw some. I want to make a bet on this. You say, okay. The high of yesterday was 1666. Let's say you could have put an order at 17. I'll buy 100 shares if I can get it at 17. Well, when you put a market order in, it says you're going to buy it at whatever price it's trading at. So the stock opened up at $20, $20.17, because everybody had market orders in. They need to get in this. It's going to take off. It's going to the moon. Look at the volume that comes in. Even with all this volume, it's still closed lower. That's what makes this so bearish, that even with all this volume, it wasn't able to maintain. It wasn't able to win the day's battle. Same thing. If I was in this, I would have a stop order. And that's all I have for a list on my high short interest. So just giving you, trying to show, go back to AMC, just trying to show my thoughts when I see a chart like this. I'm not in AMC, but if I was in it, that's what I would do. Like I said, I'm in this one. I'm in a lot of the energy stocks. That's where my money is right now, is energy, shipping. I've been seeing a lot of shift into commodity-based stocks, and that's where my money is at the moment. And I just happen to get, this one just happens to be giving me a gift. I do have other stocks that moved up 15, 20% in the last week, but this one's a gift. So I have a stop. I had a stop order today, and I'm putting in a stop order for tomorrow. So that's the difference. When you have something, first of all, you should be in a stock that's spiking. You want to buy something when it's low volume. Look at before this takeoff. Look at the volume. I mean, do you want to buy when there's high volume at the top, or do you want to buy after a pullback and the volume has settled down? Let's go back to AMC, because everybody's on AMC right now. That's all I'm hearing. All the headlines right now is AMC. AMC. The hedge funds are getting squeezed. Again, here's your AMC. Look at the volume. You want to take a chance with this and not have a stop order? Or do you want to, if you're in it, I assume you're in it at 20 or below and you didn't buy now, but do you want to protect your profits and put a stop order in? Or do you want to take the risk of it just dropping past, going down to 20? So, I mean, that's my thoughts on AMC and what's going on with a lot of these meme stocks. Take it for what it's worth, and if you're a day trader, this doesn't apply to you. You're using, I assume you're using, if you're day trading, you're using some type of indicator or recent lows for your stocks. So don't be a bag holder on AMC.